Hi everybody, this is Phillip Guan, CPA. Welcome to the special training classes. And I already finished all the training, so today is the bonus training. I'm going to try to teach you all in one and how to do tax return from the very beginning to step by step complicated. Okay, so number one, let me make sure we're recording, which is good. All the training information are not real clients. We take our clients' information very serious. So it's all make up numbers. Okay. The original information was coming from Dre Tech Software. So I'm going to make some minor changes along the way. So first, this is a very simple client with husband and wife. No kids, only W-2s. So now I'm going to change them to become in San Francisco. Come here in the far right corner. Now, as you go in here, the input screen, there's some blue color, there's some black colors. The blue color is the things that there's some input in last year. And there's black color, that means there's no input in the last years. And in a CPA firm, in a tax firm, a lot of people are asking you, and you how to do this information, how to do this. People are going to say, you know what, Chris, Sally. So what does Sally mean? Sally is similar as last year. Similar as last year. Now, in here, Aris, in this situation, the first one, they're either single, married, five jointly, married, five separate, has household, and qualified surviving spouse. At this situation are number 2 or number 3. So they are married, five jointly, or married, five separate, or in a very rare situation, they are live apart for 6 months or a year for job reason or personal reason. They have a right to do single by this situation, or if they have kids, one of them become head of household. But you can absolutely not. One is married five jointly, and the other one is head of household. Where live example today, I review a client who is not my client last year, and it was done it by one is married five separate, the other one is head of household, and that's illegal. Because when you do married five separately, they was not qualify earned income credit. But if you do married five jointly, if you qualify, you can qualify earned income credit. But if you use a head of household, you are qualified earned income credit, because you're illegally to do it one head household, the other one married five separately. That actually not just you get penalized by tax and money, you actually will go to jail because you are doing fraud. Okay, so it's a serious thing that we as a tax professional, we must follow the rule, do everything right. So either married five jointly or married five separately. And if they are married, they say they live separately, then you have to correct all the documentation via their ID and via their bank information, via their phone information, their utility information. I really show them they live separately. Okay. So this is a simple situation. First name, last name, birthday, what the job, and their phone number. Well, if this is Chinese and obvious people don't like this, let me change it. Chinese guy like this, right? Okay. So cell phone is this, and that homemaker is a nicer name to say housewife. Okay. So now in this tax software, if you don't put the last name in it, they will carry the husband's last name. But not all the cases in all the clients, especially a lot of Chinese clients, they're not carry over their husband's last name. So therefore, it's my advice to, even they're the same, put it in. So like this. And then always put those are all makeup number, okay? Just for illustration purpose. Okay. Now that's the email, that's the home address, and I'm going to change them to 94134. Now, when you plug the zip code, city will automatically pops, and the county will automatically pops. You don't need to, but that street you need to print. Now, there is a requirement to whether or not they have health insurance. In here, let's say they have. There is a requirement for them to show the ID. Let's say, I bet those are makeup one, right? Normally it's 5 years, and not necessarily the same. In the birthday. So this is the birthday. The first, the month and the day are the birthday. That is fine. Now, if they happen to have an expire, and ask them to get the one not expire. If they doesn't have that ID, you can like passport. Must be a photo. And the student ID doesn't count. Had to be government issued. For example, I will do some makeup as well, right? Now in here, someone have not been mute. Please mute yourself. Now this is one that if they have a money extra refund and they would like to direct deposit. Stay. I remember Bank of America. I actually remember the only bank volume number I can remember. I used to bank with Bank of America. That doesn't make up one, right? Okay. You need to repeat the same thing, either check-in or saving. So if it's 1040, you don't have to put it in. They still be okay. Okay. Normally, when we are processed right now at this moment are 1040. So the next question, scroll down a little bit. So they do not have, let's say they do not have foreign account. We are in the United States. We're filing US tax return 1040 and the foreigner of the US. Okay, especially in somebody immigrant to here. So you're talking about, let's say you come from China, so the bank account in China, Hong Kong, Thailand, Taiwan, Canada, anywhere outside US. That include that account. And then the second one is you have digital asset if you do have it and sell it. Okay, let's say they're very simple, no. But if you have yes, and then we will answer, and then we need to be fill information. Now in here, in the very bottom far left corner, those are represents our firm and who did it, those things. Okay, when you accurate information. So we're going to show you now. This one it shows the last year what is their total federal income tax, like in a 1040 total tax, not how much they get refund. It's the total tax that part they want. Now and then, if they are old client roll it over, they will be here. But if a new client, we pick it up, we need to get a copy of last year. We drop it from there. And then the 540 California also see the total tax. In this client, total tax for federal is 3,000 something. They say California is 0. Let's say, for example, I change it. Let's say like that. Okay. Now, this is important. This will figure out there's a penalty for estimate tax or not. The law requires to us to pay either the 100% of the last year or 110% of the last year, depends on the gross amount to avoid the penalty. The first one is April 15. The second one is June 15, and 2 months later. The third one is September 15. The third one is January 15. Like today is a few days away from the fourth quarter of 2025. Right now it's 26, right? So you still have a few days to pay for the estimate tax of the fourth quarter of 2025. Okay, now let's say if this is done. So if they are military station and you need to change it, if they change the address from last year, then you need to check this. Okay, and then if any of those boxes apply, you check those. If none of the boxes apply, just leave it alone. Let's say, assuming those are the same. Now, after we put in this, we go view, you actually can see what we just inputted. Now go to 1040. What you do? You're against the original, not against the memory. That's important. You're gonna say, well, I input it, absolutely is right. No, your purpose is double check your mistake. You look at your actual original, you put the ruler on a piece of color paper, whatever you want to do, it what convenient to you. I normally put it the ruler and also put the side here that yellow and then move around and that let me focus. I normally have like about 2 of those or 3 of them. So that way I get myself very complicated. So then when you work in one client, on the desk, you should only open one client. And you use a rubber band to put other things aside so that you can be very focused and look at that. And then you have one client, you only look at for one piece of information at one time. I normally do is I put the things in my left side. The things I've done it, I put it, I make a check mark in the bottom, in the original, but and then I flip it, I check it again. So that way, and either way, I see both sides of the paper. Actually, I done it. So then I flip it to the right hand side. So the things in my right hand side is done it. The things in my left hand side is not done it. So that way, it's easy and organized. And I only look at one thing at a time. And then a lot of times when the things I'm working on it, I either put it right here, or if I want to, I put it right in the middle of it. Or sometimes right in the middle of it and below the keyboard. It's easier to put the keyboard a little bit in the table so that your hand gets supported, so you don't hurt yourself. So put it in, and then so that way it's very focused. You can put the ruler next to it like this. That's what I don't normally do. So this side is not good. This side. So normally you see there's an arrow in here. I mean, I know use this arrow, or I use the side here. This arrow right here, like this. So that way it's very focused. And then as you can see, the one piece of paper can actually slide in under the keyboard. You actually can move it in. So that way, so it's very easy. You can use one hand to push it in and use the finger. You can put the two different color pen light in the keyboard or next to it, whatever you want to do. And you put the highlighter in there. Some people like it, do it this way, and somebody like this, no matter what, you're always in the right hand side. So that way, you're very convenient. Now, we are going to do this. Now, you use your finger and ruler to move around, and then you against the original. Your eye look at first. You look at for the original first. You move around your ruler. You move around your ruler so that your focus point, your eyes follow your ruler, and your focus point right there. And that original shows the first name of that person. And then your eye move from your paper to the screen. And you click, and you really double check it. Every single letter. Nobody like to see their name spelled wrong, just like you don't like anyone spell your name wrong. Okay? Whether or not you like me or not, that's my name. Okay? Like for example, my name Phillip double L. If people spell my name as a single L, I don't like it. Or simple And people spell my last name Guan, Guam, Guam. And then a lot of people say, so you don't like it, right? So you want to make sure, especially the uncommon one spelling. Don't make joke with people's name. Respect them. And then look at the number. The human being remember 3 digits number very clear. So you don't remember, 500 00101. No, doesn't do this. 500. And then you move your cursor, you move your mouse, and you won't move your finger. 001001. Now you click. Same thing in here. So your eye actually looking for, if you're looking for social, your eye actually move around 3 times. First 3 digits from paper to there, second 2 digits from paper to there, and the third from here to the 4th one. And then you click. And then you move to here. Same thing. Sometimes the street name is not as the spelling in a common way. So you have to respect what it is. And also, if they're a new client, the previous accountant may be spelled wrong. So if you see their tax return is different than the ID, do you remember they show you ID? And also the different than the things that show it up in those W2, that's a question you ask is, did you change? Did you move? Is it any change in the name in here, in your old tax return, is it correct? Or the name, all the things in the address in your ID is the correct one. So then, please help me if I make a mistake, so that you prevent them to say, oh, you're wrong. Okay, so that way, now you say, okay, so they say, okay, good, and then you check. Now we're very careful, double check everything. In this software, there's a places we can set in, set all capital or mixed one. We normally put all capital, easier. Even though you type small letter, they show capital. Well, I haven't set it up yet. So now, so we're done with this. And then we come here. We move from the left, from the top to, we move on, there's nothing in here, right? So come here. This is the husband, T for the taxpayer. Now, T doesn't have to be stay for the husband. T is the first person on the 1040 tax return. You respect the client's decision, whatever they want to. Okay, so let's say in a normal situation, most situations, the husband shows in the first one. But some people you see their wife, whatever they choose, the first one in the tax return. So this is the EIN number, and this is the name, okay, and then make 50,000, and this is the withholding, okay, and there's no 401k, no nothing, okay. So let's say I make this one as a California. Let's say just let me. Let's say now. After I finish, I come here, view. I could see W2 in here. Oh, it doesn't. So let me check. Let me change in here. So in here, the second option. I put in all uppercase. It's easy, right? And then there's another places right here. So change everything in here. Oh, it's already there. Oh, okay. Put this. You have to check this. So that you can show the W2. Normally, we are all set it up, but if not, then when you go to the view, it doesn't pop the W2. That means have not been set it up. Okay. So this is not the real client. You're welcome to take a picture for this one. you can use your cell phone and welcome to take a picture because it's not the real clients. So we change, normally the standard one will be 2 in here. What that means is they only show up, the standard is like this. They only show you a detail if they have more than two or more. But we don't want it like that. We want to be, even the single one, we still can see it, okay? Now, they say do not suppress 1040 SR, they're senior. That means they still show the SR. But if you don't want to, you can say suppress, which means they're all 1040, either or. And we normally okay, either way. The senior have a special bonus, 5 months. Now in here, they have all options. Now, let's say if this is all we want to do, and there's some other options you can choose to, okay? Now we don't want a mask in here. We want to show the and if you want to, you may make it. Now you can enable the oh, this is good. This one makes you easier. Okay, so okay, don't forget the okay. So now at this moment, as you can see, let me view it. The W2 will show up. Do you see it? Now the W, now you are against your original. So your head will be moving around, your neck will move around. It's good exercise anyway. When you're driving, you don't want to be too focused on one area. They do the same thing when you're working on things. You want to be focused, but not too focused. You want to relax, not too relaxed. So that way you kind of like moving around your head, moving around your body, moving around things, so that you don't, especially when you're young, you don't notice it. But over time, you want to make sure you don't get hurt yourself. Yeah. So now you can see they haven't changed it in here. Now here's how you do it. And do you remember I changed it? Now I changed it to purpose to here and then go back to here because I make a changes. Right now it's all, they should be all capital. Yeah, all capital. I will talk about that later. There are some people first time in here. I want to make sure they're okay. So the system say they don't have such a phone number. They're smart, huh? That means the system figure out there's no such of area, that there's not such a phone call, like that. Okay. And I know AO6 is the for sure one because my cell phone start 4 and 5 AO6, right? Like this. And then now this software have a function they would like to send them text message or email to the client. They say, hey, your tax return is E-file and accept it. They actually have an option to not do so. It's free of charges, but they have to authorize. Let's say they authorize. We do something. Or you say, no, don't bother me. We do this. Okay. So now in here, we do not have other thing to do. And then now due diligence. This is double negative. Do you see it? Double negative. No is a good answer. AB, for AB, you will need to do it. Yes. 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 No. They don't have kids in here. They don't. So this. No. No. Yes. Yes. No. You're welcome to take a picture for this one. This is pretty much a standard answer for most of the client. But when there are different cases, when they are different than this, you need to ask your mentor. You will be assigned a mentor for you, so that they will be mentor you and you ask questions. And they are going to be also sign the great learner and the great leaders certificate at the end for you. So now here is, let's say today, what's the day today? Today is 12, 13?
I think it's 13th.
Today 13, okay. Want to make sure I don't miss the meeting. I think tomorrow.
Yeah, 13.
No, tomorrow and the day of tomorrow I will have a meeting for 2 days. So I'm good. Okay. There's special code I will tell you when you work for us. Okay. Now, when the client do not have an identity protection PIN with the 6 digits, they need to apply for the IRS. They will automatically create those PIN. Now, if they do have their special PIN, you are going to be, let's say, for example, that's their PIN. Now, some of the people, both husband and wife, have the PIN. They will get the mail from IRS. If they mix it, they could create the IRS account, use ID me, they can trigger it. If they call, they must be get the IP ping, so therefore they won't able to get it from the phone call. Okay, now it's an every year different, so you cannot use the last one. It's a protection. So now this is the E5 state of California. So now in the state of California, like here, I change the state. And here, we don't use the text for this one. And then there's another one, healthcare. Let's say that this person work for a company provide healthcare for himself and his wife. Okay, it's straightforward. So now, at the end of the day, we're done for this tax return. This is the most simple tax return. And this is what the software company provided. Now, those error messages, you need to go back to here and down here. And then the state of California tax software has not been fully okay to use yet. That doesn't mean it's wrong. It just means franchise tax board still developing. Okay, we cannot E5 this tax return basically. Pretty soon. Okay. Now today is actually the first day the IRS accepting E5. But since state of California is not accepting, otherwise you have to do E2 times E5. So okay. Any question for me for this? Only in this situation for the training today. I'm not ask you other questions. So for example, they actually can get the refund. Do you see it? So they're fall in here. No question? Okay, now if I have the interest, okay, the interest income. Let's say you use Pan American. Let's say you have 230 sticks. That's all. And then you also have some dividend. Now, some bank, besides the banking, they also have the investment portion of it, like what the Charles Schwab and the Wells Fargo have it. Okay, so let's say if they have it, okay. P stands for taxpayer. T stands for taxpayer. S stands for the spouse. The second one in tax return. For example, let's say they have a dividend of 500. Also, this dividend is qualified dividend. Qualified dividend is it as cheaper tax, so it's a better deal. So you don't make those decisions because when you receive 1099 from the books firm, they already gave it to you, and those already get it into that. So now those two numbers are going to show in Schedule B like boy. Oh, I need to in here in a setting. I want them to, no matter what, no matter very little, I still show Schedule B. Now, if I say print Schedule B when required, and then when they're too small, they won't. But if I uncheck it, that means they will always print Schedule B, Schedule A. Okay. For us, for the training, we want to see more. Okay. Now, after this, we are going to see Schedule B like boy. You see it? Schedule B is so the interest and the dividend, then it's all going to show in 1040. Like that. Now, what if they have a stock, okay? And they sell some stock, okay? Stock is in here. Income, the second one. Fly hand side, right there. You can double click in here. Let's say assuming the spouse have some stock, or more likely in their situation, they join it, okay? They both have it. Now, the first one is the cost basis is also show it up in the 1040 and reported to IRS. The 1099B like boy, it shows say it is report the cost basis reported or not. When you see the original, we show you what is 1, what's 2, what is 3. Okay, it's stay there. Okay. Now, let's say for example, well, let's say if before we need to be shows all stock transaction, but now no longer need to, because the IRS require all the stock company like Charles Schwab report all detail. So all you need to do is report the summarize. Like
1099.
Yeah, like for example, the for example the ABC stock company, right? Say okay. That is a broker firm. Okay. Now they have an EIN number. Let's say that company's EIN number, the stockbrokers firm, and then obvious. The first one is various because you're now. Here's the funny part of this. It's supposed to be various, but this software doesn't take various at the ending. So you must be put the last day of this. Now, when you put various at the ending day, they still can show and print out tax return. When you do e-file, it becomes error message. So therefore, just put that last day of the year.
It doesn't matter what day you sold, but just put the last day.
Yes.
If I sold in July, still put this.
If you only have one transaction, it's one, because you are going to have a summarized more than one. So at this situation, it's various from at the end of the year. So now
1099B.
Yeah, 1099B. So now, because that way, you are going to tell you are going to decide it the short term. Let's say they sell 55,000 in total. Okay. And then let's say their cost basis was 35,000, which means they make it 20,000, right? So now in this situation, now if they don't have what cells, and that's all that you need to do. So if they have what cells, and here is something you don't want to know it, but this is it. The what cells you will disallow you. Now in here, let me show you first. So this one is 20K, right? $20,000. Watch. If you have what cells, and what is the what cells first? Now in this situation, it's the gain. That's fine. Now let's do the reverse. You sell at 35, you buy at 55. So you lose 20,000, right? So you want to get deduction. But here is the what sells getting places. Watch this. If you sell a stock at loss, let's say today, you sell a stock at loss, like Apple. And you have to look back for the past 30 days, whether or not you have been bought in any share of the Apple. If you do, you cannot deduct any of this 20K. Second, today, the same day you sold, you cannot buy. The third, the next 30 days, you cannot buy. So that means before 30 days, after 30 days, and the same day, which is total 61 days, you cannot buy in any share of the stock you sold at loss. If you do, the whole sell what sells. Now here is the worst part of it. The what sells is not decided by you. The stock company is already decided for you. It's print. And I always send it to the IRS and you. Let's say you're doing day trading and you have a lot of what sells. Let's say, and this crazy guy doing 30,000 what sells. Guess what is going to happen? You don't want to know that. And it's supposed you lost 20K, right? And you have to pay tax on 30,000 again. Because that 50,000 what sells, you weren't able to deduct it. So therefore, your cost basis become $5. 5,000. 5K. So make sure yourself try not to be get a what sells, which means before you hit but you sell a loss, before you hit it, sell, you look back, see if you buy anything in the past 30 days. If you do, let's say 28 days ago, you buy something, you hold for another 3 days, right? And then you make sure on that day you don't sell, you don't buy anything.
The same stuff, the
same name,
same
like
stuff.
Apple, like whatever stuff. And then the next 30 days you mark down, you don't want to buy anything. Yeah. So in my practice, I cannot disclose the name of the client, and here's the worst part. I can tell you. I don't want you guys to know to become like this. Let me tell you the worst part of my 20-something years. What's this? They sell it, let's say, in 1 million. They bought it 1.5 million. That lost $500,000, right? The what sells is a lot of people, they trade. They lose 500K on the paper, on the real stock, but they still need to pay tax. That's the worst of all. You lose $500,000 in the real stock, and you are still making 300K on the tax return. You pay tax on this. Yes, it's real. And I see people worse than this. And I see people as crazy as more than 2 million what sales. Because they do day trading. So here's my advice. I'm talking about tax. I want you to learn it to make sure in your best possible to avoid what sells. Let's go back to something normal. It was talking about 55,000, 35, know what sells. You learn from me, number one, you want to apply to yourself. And number two, you want to teach other people to try to avoid the mistake. Now, Schedule A is talking about the house that you buy it for yourself to live. So let's say you do the house in, say, California, San Francisco, for more than $1 million. So normally 1 point something, 1.1 or 1.2%. Let's say, for example, this is this. Now, and then let's say if now the mortgage is only 750K, which is more than 750K mortgage, you cannot deduct all of them. Okay. Now, let me tell you the straight way first. Let's say, assuming they have a 600,000 one, they'll take this one under 750, that we straight input in here. Okay. Let's say they do 45 like this. Now, let's assume they have an engineer now. What can happen? There's a state tax, and the total together is 30K. Now, here's a cool thing about this year. Last year, this number was 10,000 maximum. Right now, you can actually get more than up to 40K. Now, in this situation, I'm talking about just the husband work. Let's make the wife work. Okay, enough. We're talking about the wife is also working. Now come here. Let's say the spouse is also page down, page down, page down. As let's say they work in the same company. Let's say this is making 100K. Now, the state tax we're going to increase, right? Because I increase the income. As you can see in here, state tax increase. So the total is more than 40K, but limit of 40K. Which is a cool thing because they're still under 500K, right? So therefore, they are like this. That means compared with 2024, they are 30,000 more. A lot of people this year, after the 5 tax return, they were dancing going home because this 30,000 more times the tax bracket if they're 1/3, they will have about 10,000 or 8,000 to 12,000 more refund. That's the cool thing about. Now, only if you get more than 500K, that after you lose it, you go back to 10,000. So now in here, well, do you see it? Big refund. Yeah. Now, same client, same income, same reaction, they probably have about 8,000 refund. That's it. So this is a happy tax year. Okay. So now let's make up a little bit more. Let's say they have some donation. That's Schedule A. They put some donation. And there's some other than check. So let's say they do 350 some goodwill. More than 500, they need a receipt and also need to be double checked. But to this, even less than 500, you need a receipt. Most of this are eliminated by 2017 tax law changes. It used to be have it. This tax software has been there for a long time, for more than 40-something years. It's a very good tax software. So now I'm going to tell you, what if you live in San Francisco, you buy 1.2 million, you down payment 200K. Now you borrow with 1 million. Now here's what you can do. Right here. Do you see this blue thing? So now 2 of you join together. Okay. Not this one, right? Not this, not before this, not this. The law changed it. This. And then this is after, right? So 1 million. You really can't hear those. How 1 million is 6 zeros, right? 1, 2, 3, 1, 2, 3. No. But you can't inside your mind, you don't say it out loud. Because you don't want to be in front of your client to type one more or one less. So when you do things, you're focused at that moment. I remember when I learned how to drive a car, my driver teacher tells me, when you lie in front of the stop sign and
1001, 1002.
Yeah. No, you say, yeah, you're gonna count 1, 2, stop, and inside your mind count 1, 2, 3, and then move. Yeah. So now, those 2 numbers in here. Now, because sometimes you have more than one mortgage, right? So in here, now in here, let's say if you have a 7%, for example, that's 70K, right? Now you have to check this little box in here. So how much you can deduct it? Not 70,000 in total. But let me see. Let's see it. Schedule A is this. Now, this is give you a huge refund, as you can tell in here. Look at this. You see it? It's pretty cool refund. Now, let's first count how that 52,000 something alive to. Do you remember we were 70,000? Right? We paid 70,000 for 1 million. So the number is coming from this right here. And under miscellaneous, you scroll down slowly. You use your mouse and you move and your eye follow. Right here. You see it? No. And then this is what we input. Do you remember that? Okay. And then here's what the law say. I don't know what, but it has the law said. As we inflate all everything, the deductible amount decreased. So, right, it was from 1 million to 750. So, but that's the law. We respect the law. Okay, so therefore, only 75% of the mortgage are deductible. 75% of this equal to this. That means this is not deductible for further. This is not deductible for further IRS. But this is deductible for state of California. And further only can deduct this. State of California can deduct the whole thing. So we need to add this one back in state of California. Many people forget about that. Okay, now 17500. And this is state of California. And if we don't make any changes, the state of California is going to have this refund, right? 13,000 something. Now watch. You remember it was, oh, not this, this one. This, right? 17500. What's this?
Linda Arvinda Lane.
Oh. Hey, Linda. Oh.哦，等我睇先，我搞咗烏龍，我搞咗烏龍，我做緊 staff training，而家有成10幾個staff 等我 on Zoom meeting，我哋可唔可以改得？我可以改去聽日或者改到睇先，聽日後日，我聽日日頭同後日日頭都得時間，聽日夜晚我同後日夜晚會出去 go to some business function，你聽日同後日日頭你得唔得閒啊？I can, well, I'm gonna make myself happen for you. Okay. 唔係，我聽日咧，我要去參加 function。我相信我4點後應該唔得，後日我都要參加 function， 4點後唔得。但係我聽日嘅日頭我得，後日唔得。咁然後 the day after 我就應該任何時候都得。咁2日之後，今日係 Wednesday, right? So Tuesday, Wednesday and Thursday 2點後，但係我有時間，但係我哋嘅 time 好 limited， is only like 1 hour or 2 hour。但係如果我 Friday 我 wide open，Friday 我 anytime day and night I'm fine。Right? Okay. Now why don't you do this? Go to 我嘅 calendar 去 booking。Even book more than one。唔係我今日唔記得咗啫，我今日搞活動啫。OK sorry。嗱你不如咁啊，你聽日話俾我聽好冇 ？OK 我OK 好 sorry 拜拜 I'm sorry。嗱，我哋講緊 ，so we are talking about. I'm so sorry. We are, when so instead of California, this amount. So don't overtrust your own plan. Write it down. It's number 17500. Right? So and then later, there's always a notebook next to you. And then you come here. You remember the state of California was this, right? And I write it down in here. So we have to go here, go to state, go to California, and go to adjustment. Do you see it? Right here? Adjustment. Item, right here. Right here. And we are going to do this addition. Add this mortgage deduction for state of California. What? Do you remember it was 13,791? Do you remember that? For the refund for state of California? All of a sudden was 15,000. Do you see it? 15,418. So 1,700 bucks more. What we just did it, we're going to help the client get $1,700 more refund for state of California, because we add on that 17,500, where the federal cannot allow to deduct it, and the state of California allow it. Okay. One more thing, I want to learn this. The rental property. Okay. Let's say they own a rental property. The house has three functions. Number one, you bought it for you to use it. Primary residence. You sold it, and you live there for 2 years. You can sell, and you have up to 250K tax-free. Now, if you have a second home, the mortgage and property tax deducted, but you won't enjoy the 250K capital gain. Second home, you cannot. The vacation home, you can also enjoy the mortgage interest property tax, but you cannot take a 250K. And also every 2 years, you can only take one time. Okay. So now the second thing is you bought the house for other people's use. This is rent out. You could collect the rent. So let's say they own houses. So I normally put E1. Let's say 1 Main Street. I just make it up. Let's say the nearby here. I just make it up. The single family home. Now, if they just bought it in service, get some water. Yeah, we have water. If they just bought it in the 2025, you do this. If they sold it in, you do this. Let's say, assuming they just bought it. Now, if they are not bought it in 2025, if they bought it in if there's some loss, you have to carry over from here. Right here. Let's say, assuming they bought it in here. And then you have to figure out what kind of house. Let's say they're single family house. And then, now, if you spend the time in more than, it become a QBI, you can deduct an additional 20%. Now, you probably understand. So what is QBI? So you're going to have another class like that. So you can Google it first. Okay. So now let's say, as you know, as in this is a QBI. Now, if there's a prior year, we have a number in here. But if there's and then we put it down in here. Even though we carry over the client from other CPA firm, and then we carry, so we can create comparison. Okay. Now, and then in here, the middle. So the first one here, 365 days. They don't use it for now. Let's say 3,000 per month. They rent out everything. So now, because the first year they're doing some advertise. Normally, none. So if they do some auto, they do some travel. So normally you don't just put the number in here. You have to put some mileage in here and to calculate it. E, the elephant. Now, it's the first one. In case you have more than one, and then there's a second one too, right? E1. Now, You have a house. If they don't have another car, you say no. No. Let's say this is only exclusive for this rental because it doesn't use often, right? Because so it's not supposed to be many mileage. Let's say they maybe spend about 433, for example. The commute for themselves to use it for other than this rental, it could be 8,000, for example. Okay. Now you can force the mileage or actual, but let's make it simple. This is gonna create how many? Now let me go back to here. You see the rental? Then they calculate it for you. Pretty cool, right? So now, obviously, this actual calculation is in here. You remember where we put all this, right? That's how they're coming from. Okay. Now, obvious. The auto, there's other thing. Let's say there's some clinic, but if they're $568 clinic, they're not required 1099. But if they are 658, that's over 600, it requires a 1099. So assuming if they do have a 1099, and then here you have a question to answer. Upper right corner, did they make any payment request in this situation? They do issue it. You see it? Now, remember, you answer the due diligence, you say there's nothing wrong. And you make sure if they have the amount is more than $600, they are required by issue 1099. But if they do not issue 1099, and you're not supposed to be help them to put it in a tax return because it's not compliant. Otherwise, the due diligence is not going to work for you. Okay. So let's say, assuming they're very compliant, they're doing everything good, they 1099 everything. Okay, now the first year, let's say they hire the agent to help them to looking for the tenants, right? And normally like whatever percentage, like let's say 5%, for example. Depends. Sometimes
First month of rent.
first month of rent.
Yeah.
First month of rent. So let's say 3,000. It is right. You can track it. Insurance. Let's say I'm making up as we go. Let's say even they hire CPA they do a tax return right now, they cannot deduct it right now. It's that way for next year. Let's say if they don't have any legal issue, there should not be anything in here. But if they have a legal issue in accounting and professional, they're going to be in here. Management fee. Let's say, assuming they are asking somebody to manage it, they are
7%.
7%. 7% now. Look at this. That depends on not all the things. 7%. Let's say assuming the 7%. And then times 0.07. Insert. Mortgage. And they should be a 1098 follow. Now, the rental mortgage, there's no limitation of 750K. Even the 1 million or 1.1 million, they can deduct all of them. Only the primary resident have 750K. So let's say for this one, let's say I'm making up as we speak. Okay. No, don't have it. Let's say that repair. The repair is labeled if it's more than 600 or a portion in a year require 1099. Let's say they're doing very good, they issue 1099. You have to see the 1099. And you have to make sure you have a copy of it. Let's say they have it. The supplies, on the other hand, all you need is receipt. For example, you go to or the supply store to buy the things, you need a receipt. You don't need a 1099. You don't go to the supply store. Let's issue me 1099. Label does. Supply doesn't. Now let's say, because the first year, right? Taxes, property tax. Okay? The property tax they pay. Let's say, assuming they pay in, depends what kind of houses they are. But if they are in Bay Area with the 1 million, but normally 1 million with more land, right? Let's say we're talking about the one, let's say. Utility depends on if you cover and include in that 3,000, you cover and you pay to yourself, and you didn't deduct it. But if the tenant pay for it, or the tenant pay you again, and then if you want to deduct it, you add the rent up there. You cannot just deduct something you did not pay for it, basically. Anything up down here, you pay for it out of your pocket. Depreciation, it doesn't go straight out here. Here's how depreciation works. Now, today, I'm going to use one day. You pretty much tell you most of the thing about the personal tax return. You just keep practice 10 times of this one, you know how to do it. It's the same as good as you do 12 practice. E, like elephant, the first one. Because some people have more than one, right? So now, E1, do you remember I do that? Now let's say, assuming they bought it exactly the same thing. Now, how to figure out the ratio of the house with the building and land, their property bill. The property bill will figure out what percentage. Let's say they are in San Francisco, sometimes the rent is more valuable than the building, but in some cities they are different. Let's say they're 60-40%. Let's say they have this house is exactly $1 million and 600 by the land, and then 400K by the building. 400K in here. So now this one. Right here, this one. Now this year, they have an option in here to put a year. Last year, you do hard input it. And then you don't put anything in here, you put the land, 600K. Now, this will create more realistic. If you have that, this will be the 1 million. If San Francisco, they were 1.14. So now, the depreciation is going to work like this way. This is the next year. So now, the rental is going to go work like this way. Then ends up like huge negative, right? Now, because the mortgage is good. Now, more realistic in this cases, to be fair, the rental income probably more than that. The new houses, right? Like, Chris, how much rent we suppose normally $1 million house, $1 million house, rental income per month, 5K?
45 to 5K.
Yeah, let's say 5K. And then the management fee will be 60,000 pounds. Depends how many percentage. This is more realistic numbers. Depends on the market. And then because there's a huge, it also depends on what kind of interest rate they are. Right? Okay. So in here, there's still losses. Now, here, you see, even they have losses, they cannot get anything because this. They have this loss. If the income more than 150K, they cannot deduct it in this current year. They call past loss activity. You cannot deduct it this year. You can carry over to next year. Okay. Now, only if I'm changing the number right now. Let's say, no, it's 70K. Now, at this moment, I change the number. I change the income. So they have 120K. Now, what can happen? Their portion of it deducted. There's a calculation in here. They're going to tell you what you can deduct it, what you cannot deduct proportionally. Now, obviously, that means if the income is less, and this will be more. Let's say I change it again, this number. Let's say if I say the wife is just looking part-time, doing a little bit, right? Let's say. Now, what can happen in this moment? They only make 60,000. Now, this full 25K is the max you can go for. 25K is the max you can go for per year. The rest of the money will carry over. Like this. That's how you deduct it. The total loss, you can, this will be carried over next year. Okay. So if you keep continue, the income is high, when you can deduct it, when in a year or so, and then decreasing the gain. So you never lose it. You cannot deduct it in the year that you have more than 150K. Okay. Now let's talk about if you have a self-employed. Let's say you have a consulting business, okay? Shift Control S. Enter. So now, let's say on the side they're doing some consulting. Let's say they make 100K gross. But most of the time, they're not that even number, right? Then more likely, let's say they will be like this. 1, 2, 5, something like that, right? Especially when the client give you all the even number and you have to say, could you double check, make sure that is not the guess number, is actually a real number, because it doesn't look normal to me, right? So, and in fact, the IRS will have a higher chance to be audit you if you have all the even number. I mean, a few even number, it's fine, but not all even number. It's possible, but it's very slim. So let's say they have some, let's say they don't, depends on that they issue 1099. You have to answer those questions. Now, if they are just start the business for this year, now let's say if they have insurance, They don't have mortgage for this. There's some legal fee. There's some offers. Just tap. You notice that from the letter of A to E. From the A to E. But what if the some item doesn't show in here? Just go to other expenses and delete it. Right here. You double click and you just type it. Let's say you pay rent. This is lease a car or equipment. This is the office. Okay, let's say do not hide anyway. Let's say this is a consultant. That's it. Your schedule C will be like this. It makes about this. But as you can see in here, it more likely we are missing a car. Because as you do normal consulting, you need a car. Sometimes go to client places to things. So let's say they happen to have things and they bought a new car, okay, for the consulting business. See? Of course, you write down the name of the car. Then I'm putting business auto right now, but the name of the car. Let's say in the second day they bought this car. 50,000. They put 80% of this car for the business use, 20% for the personal. Now, depends. If this car is under 6,000, okay. Do you remember the building was 50? Profit. Other things will be this, 45. This one, M, 5 years. Guess what's gonna happen? Watch. It was about, you remember it was about 70-something thousand at the end. But right now all of a sudden, boom, 16,000 decreasing. You see it? So huge deduction for the first car. Now, normally they require a computer, right? To do a business. And the printer should too. So therefore, and even their cell phone for the business user. See? One. Computer. Let's say the same thing. They buy the computer because they for the business use. Let's say they bought something pretty expensive one for something like function, not the regular one. Let's say and buy. Now let's say they also need a printer, right? The printer is not that expensive. Depends on what they can. Let's say they buy 801. They need some furniture, right? The new offers need a furniture. Let's say they put $3,025. What else? That's it like that. Okay. Now, you see a depreciation increase. Now if you go to here, each and every of them, they are 40%. You do it right away. Bonus. Like 40% of this is 1,200, 40% of this. You see? And then the rest of the money, they do it for 5 years. So you have more. So little of this, right? This. Whatever left, and then so you add up together this. Two of them add together basically, right? This bonus plus this equal this. So let me flag those two cases here. Those two numbers add together equal to this. So as you can see, the total is this. You need to deduct about 20K. Do you see it? And the number go to this. Okay. So what else we want to talk about? Let's say this. Now I change this situation. And this house is not just bought it in this year. Okay. Now, and then they actually they bought this house for a long time ago. Let's say 20 years ago. Okay. Each and every year, their depreciation is equal to is equal to this, right? This is 1 year. 14544. 20 years. Have been depreciated. So here, 5 years. Double click in here. Click in here. 14544 times 20. They have been running up for 20 years. This is the total depreciation that have been depreciated, right? And then insert. So what's going to happen? And now you're going to show these houses. Let's say in the last day they sold it. They sold it in, this house was bought in 1 million, let's say. They sold at 1.5. Now the commission, normally you pay how many percentage commission normally? Chris, how many percentage commission right now?
2.5 each.
Okay, which is 5%, right?
5%.
Yeah, 5%. So let's say, obvious, you have more than one commission, you have other things, right? 5% of 1.5. $75K. Now, obvious, you have other things, right? There's some other thing. So let's say add up together, you have about 90K. Just for example, okay? And then how much gain they're gonna do? So I just put in here, right here, under depreciation, the far line. We calculate it. We are going to calculate it. There's a huge gain because this 4797. This house was sold at this. This house was bought at 1 million, but they've been depreciated. So therefore, the depreciation is this tax deferred. By the time you sold it, they all add back to the gain. Not a cool deal. Not really like tax free. So in the depreciation is called allow and allowable. If somebody use a table tax to do this tax return and go it long until put the depreciation in here. By the time you sold it, even you have not been deducted much, the law requires you to deduct allow and allowable. Whatever the law allow you to deduct that much, you have to add it back, even though you have not been taken. And that's the worst things. Now, in this situation, this will be a huge taxes. You see it? Because it's the long-term capital gain. Now, today, Aris, we don't have a lot of time to go detail. I just want to go, you are not going to be fully understand what I talk to you. And this is supposedly you learn it over about, let's say, about a month or two, right? And so that, but right now I use the shortest version. You know all the things except the last part. I sold the houses because the CPA will figure that out for you. Yep. So, and then you should be good. Okay. So now I will accept question other than sell houses. Okay. Sell house part, I don't want you to bring a question. Okay. Anyone have any question about today's training? I'm going to close out today's training. Any problem of W2 input? Any problem of the primary residence schedule A? And then when you have more than 750K, you have to put in here, and you make sure check this little box. And then anything regarding about the interest income, and now this is the property tax. Now, obvious, you still have some DMV or kind of thing, right? And then dividend interest. And you also learn rental property. The client will provide all this. Now, assuming this is not the first year, you actually even have a last year number, can see the comparison. If they see 2-year comparison are off a lot, you should bring that up. They may make mistake to tell you one way or the other. And then in the Schedule C, everything self-employed. Now, what is the best way to run a business for the tax purpose and not in Schedule C? Because Schedule C is subject to income tax as well as self-employment tax. If they incorporate this business into S corporation, they will be the most tax saving way. But today is not what we're talking about in here. Now, and then sell the houses is very simple. When in under depreciation schedule, under here, right here, you just input a few numbers in here. The CPA will guide you how to do this. Okay. When you're working for in here, you have a chance to stand next to me or sit next to me. I review everything for you. Okay. There's an old saying, practice makes perfect. It's not that difficult. It's fun. And I am going to close this training.